Well, traders are always looking for a great, consistent strategy they can use in the markets, and our guest today is Kathy Lean, who's talked to a lot of traders in doing that. So, Kathy, what are some traits that good traders have in common, or what kind of strategy they're using these days?
Well, as you mentioned, there's quite a bit of volatility in markets these days. So in volatile market environments, you have one or two choices. One, you either stay ultra long term, or two, you stay ultra short term. In terms of ultra long term, I've got a nice little strategy called the double Bollinger strategy, which basically kind of helps you profile the market and lets you know whether we're in uptrend, downtrend, or in a range. So typically, when we're in highly volatile market environments, that's still just volatility on an intraday basis. For the most part, in some currency pairs these days, we're still seeing nice trends. So the Bollinger Bands help you identify whether we're in trend. And if we are, it's still better to look for opportunities to join that trend than to fade it. The other option is to go ultra short term, and in terms of ultra short term, you're not staying in your position more than a couple hours because you don't necessarily want to be subject to any volatility that's happening while you're sleeping or when you're just kind of away from the trading screen. So you basically have one or two choices, and I think that's the way you need to approach it when markets are volatile.
All right, so I know about Bollinger Bands and the two bands that go around. What is a double Bollinger Band?
Well, the double Bollinger Band is a strategy I write about in the little book of currency trading. And what it is in addition to the standard Bollinger Bands, the standard Bollinger Band settings are 20-period, 2 standard deviations. We've added on the 20-period, 1 standard deviation. So it creates for you, 4 bands or zones. The 2 bands on the top are known as the uptrend zone. The 2 bands at the bottom are known as the downtrend zone. So if the currency pairs has a very strong uptrend, usually it will remain in the 1-2 band in the upside. If it's in the downtrend is strong, it'll be in the 1-2 band, the downside. When it comes out of that, however, when it goes from the downtrend into the range trading zone, the middle space, that's when you know that the trend is breaking, it's exhausting, and you're going to have a more significant turn.
And is there a specific currency pair that you like to use this on, or will we look across all of them?
I like to actually use them on almost all the currency pairs, except for the ones that are extremely range bound, because sometimes you have a really nice tight range where the Bollinger Bands are useless. So like Euro Swiss, for the past couple of months, have been stuck in a range. The Swiss National Bank pretty much pegged it above 120, so there's no action there. You shouldn't use it. Usually the ones that are more trending where the bands are wider, that's where you have the better opportunities with Bollinger Bands.
Kathy, thanks for your time.
Always a pleasure.
You're watching the MoneyShow.com video network.